Business is booming for Perth builder Frank Letizia.
We should be right in saying that for a bit, I see. Yeah.
But with so much construction, it's hard to get his hands on supplies, and when he does, the prices keep going up.
Already this year, what are we in, nearly May, we've seen 2 price increases come through, and some are just hitting us with like a 7 or 8% price increase effective almost immediately.
Bricks have seen some of the biggest hikes.
To lay a brick used to be about $1.30, $1.40 a brick. Now to lay them are around $2.50, $3 a brick.
The latest inflation data shows some of these increases, but the true numbers have been masked by government grants. Spending in the home maintenance category rose in the March quarter. Construction of new dwellings rose almost 2% if you take out the impact of government grants like Home Builder. Across the country, rents have been dropping, skewed largely by falls in Sydney and Melbourne. But in Darwin, rents have been soaring, surging more than 16% in 12 months.
Luxurious formal dining. Prices have certainly increased, and they still have been on the increase because the demand has been very strong.
Darwin's rental vacancy rate is less than 1%.
It's been a welcome increase for Darwin, and Darwin's becoming more vibrant again because of it.
Overall, the March quarter inflation was muted. The biggest lift came from transport as we spend more on fuel, and health as changes to the PBS took hold. Annual inflation coming in at just over 1%. In fact, the RBA's preferred measure, annual core inflation, was the lowest on record.
Today's data would have confirmed what they expected to see, so there weren't really any big surprises in it.
Today's numbers keep annual inflation still well below the RBA's 2 to 3% target range needed to move interest rates. But groups like Westpac are lifting their 4-year fixed mortgages as global money markets push rates higher. It appears retail banks don't think the RBA can keep rates on hold for another 3 years. Dr Hunter expects to see the real fireworks next quarter, when we'll see a recovery from the COVID-impacted childcare and fuel prices a year ago.
Those two things alone obviously have now reversed, and at the time put a big drag on inflation last year, and so the kickback from that will be headline inflation very likely above 3% in the June quarter.
So get ready for some serious catch-up in the next round of data.